All right. Hello, class. My name is Zaki Dejani, and I will be walking you through my presentation. My presentation is going to be about Tesla's valuation for their stock price in relation to their current market price, according to Forbes. All right. So without any further ado, let's begin. All right. So in today's presentation, I will be talking about all the positive metrics that Tesla's been able to hit and all the impressive numbers that they were able to achieve. But however, we will also discuss one major caveat or concern that will need to be taken into consideration if you are thinking about purchasing this stock or investing. So the positives from Q2, okay? So Tesla's earnings per share is increased by 300%, which is a multiplication of 4, which is absolutely ridiculous. That's an astronomical gain right there. The EPS was higher, 50 cents higher than the expected amount. So not only is Tesla surpassing their previous performance, but they're also surpassing their expected performance as well. All good stuff. Okay. Revenue was $1 billion higher than what they were expecting at $12 billion. Also, very good news. Tesla's gross margin is higher than the industry's average at 25.8%. That's up from 22% in Q1 and 18.7% last year. All very, very good news. And even better when you consider the industry average is less than 10%. Okay. But despite all the positive news, Tesla's stock is still overvalued. All things considered, Forbes estimates Tesla's stock valuation price per share was only $558 per share. Okay. And when we compare that to the current market price of $687, there's a huge discrepancy between the two numbers. Okay. And Forbes was able to reach this conclusion by using the formula stated below. Valuation price per share equals price to earning ratio, or PE ratio, times expected earnings per share for 2021, which was 99.1 for the PE ratio and $5.63 for the EPS. You multiply that together and you get $558. That is lower than the current market price by 23.1%. Okay, so should you buy now or should you wait? That's a very good question. And it depends on what school of thought / what risk factor you're in. Okay, so the pros for Tesla is the fact that they're experiencing extreme growth. They're in an expansion phase. They're growing really, really rapidly. Okay, they've been having solid performance from Q2 with many metrics hit or surpass what was expected. Tesla leads the electronic vehicle market with an expansive charging infrastructure that is uncompared in the industry. And that's the reason why they're doing so well compared to, for example, their number 2 spot or the number 3 spot. Okay, they have expansive infrastructure. There are a couple of cons that we need to consider. For example, tax credits are not forever. They're not permanent. The valuation, the metrics that they're hitting right now are slightly inflated at the time of recording. Okay, so the other issue is increasing EV competition from other automotive companies. So they're going to bring their experience over to the EV side, and they're going to pressure Tesla to compete on price and features. Okay. There have also been supply chain issues, such as, but not limited to, the microchip shortage that the automotive industry has been experiencing. Also, Model Y and Model 3 have been choosing to go with cameras instead of sensors. They've been cutting back on sensors for cost purposes. Also a little concerning. Should you buy or should you wait? So I would say, depending on your risk tolerance. If your risk tolerance is high and you have a lot of time, then by all means, buy the stock. There's lots of growth to be had. But if your risk tolerance is low and you're a short-term investor, I don't think this is the best time to buy, especially if you consider the fact that there may or may not be a correction. That's something you need to consider. All right. Thank you so much, class, and have a wonderful day.